Tariffs have been in existence for hundreds of years. The U.S. has done tariffs forever. The fact that people are claiming that Trump is doing this for the first time and it's terrible and he's a terrible person, it's just a way to get at one side or the other if you don't agree with one side or the other.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. My name is John Martfeld, and I am joined with Isaac Johnson today,
Hello.
Which is great. Just us.
Yep.
Can you believe it? They've let us run this podcast today?
I think they're probably going to break through that door any second now.
I know. I think they've gone mad. Did we lock the door? I think everything's good.
We can say anything we want.
We can say anything we want. So our topics today are based on that.
Yeah.
Are going to be a little bit of our market stuff that we always talk about. We're going to talk about the market movement. A couple weeks ago, we had a podcast in reference to the market going down and why it was going down. And then we've had a recent resurgence of the market, and it's kind of the same similar news that built up the tariff talk. Mm-hmm. So we're going to get into that a little bit. But we're also going to talk about March Madness.
Of course.
And that's something,
Tis the season.
We're adding a little flavor. It's not just going to be about financial stuff today.
Yeah.
But anyway,
before we get into that, remember you can join the Market Moment community just by subscribing down below. Make sure to like this video if you like it, and check that box.
Check that box. Please do. Especially write comments about Isaac and I so that we can get more of these alone together. Yep. This is great. We would appreciate that.
Great podcast. Don't want anybody
best
else.
Ever. We don't need anybody else.
Great.
All right. We're going to talk about the market because a couple of weeks ago on this podcast, the market was going through a pretty panic sell, and we had a lot of fear in the market, and a lot of things were, driving the market down. But one of the biggest topics was, of course, the tariff talk. And so I'm going to kind of go into that. And Isaac, obviously we have opinions on this stuff, and it'll be fun to hear your opinion on this.
Yeah.
Because I have kind of lots of opinions that flow around. Number one, and I said this, I kind of been the pessimist on the show for a long time. And I've said that we've been overpriced for a long time. It had nothing to do with who became president. It had nothing to do with anything. The market had been on a tear for basically 15 years. Yes, of course, we had 2022. We had a few little COVID 3-month period where we had a little backtrack and so on. But for the most part, the market's gone from 6,400 on the Dow to 45,000 on the Dow in a 15-year period. And that type of momentum eventually, for healthy reasons, has to stop. The catalyst, in my opinion, was the tariffs. The tariffs scared people, made people fear that we were going to end all this trade with all of our partners, including Canada, Mexico, Europe, China, and you name it. Everybody's not immune to the tariff talk, the Trump tough tariff talk. And that created the sell-off, that catalyst. It wasn't because of the tariffs, but just the thought of it put fear in the market, and we had a sell-off.
Yeah, no, I agree. I think I was honestly shocked. Obviously, like you said, there has to be some sort of catalyst for people to change their thinking. Because obviously, if you're buying stocks at a 30 PE right now, like something's got to change, or you're just going to keep on buying them.
Right.
And this was that fear. There was also a lot of the Ukraine war stuff going on, and everybody needed to take a moment. I told people when I was talking about it, this is kind of how I describe the market even outside of this, is like, companies are really good at making money. That's what they do. That's their job.
That's what they're charged to do.
That's what that's what you buy their stock to do.
Yep.
And they're really good at it when they know the rules. And when you change the rules, especially drastically, they have to relearn how to do it. And there's always going to be a waiting period. And that's kind of what I feel like a lot of market slows come to.
Yeah.
Is like we're just right now waiting for these companies to figure out
how
this new tariff landscape, how to make money in that,
Yep.
and if that's going to be, the past 2 weeks was it, awesome. They figured it out kind of quick.
Yep.
It may be a little bit longer. There may be something even bigger on the horizon. I mean, my crystal ball's not working right now.
Yeah.
And so if yours is working, let me know.
If what's not working?
My crystal ball's not working
yet.
Yeah.
I don't have one. I broke mine years ago. I say this, like, it's funny how we have so many different opinions, and if you watch any financial planning show or any podcast or anything else, it's just a lot of opinions, and we don't necessarily have a lot of facts to back it up yet because we're trying to predict the future, like you said.
Right. We only have history.
Exactly.
Yeah.
I can say this with tariffs. There's a couple things that I think are pretty humorous. Tariffs have been in existence for hundreds of years. The U.S. has done tariffs forever. The fact that people are claiming that Trump is doing this for the first time and it's terrible and he's a terrible person, it's just a way to get at one side or the other if you don't agree with one side or the other. So the fear of tariffs is not to me, it's like overblown. Mm-hmm. Also, the fact that I've done some diving, we are the lesser end of all the agreements we have with Europe, Canada, Mexico, China. We have given more than we have taken as a United States trading partner. I do think there is a lot of room for negotiation here. Yes, Trump comes in with a bazooka and shoots it, and it seems like such a big deal. But there is going to be give and take. And I also think that foreign countries need us more than we need them. It doesn't matter who it is. The entire world, the U.S. consumer, the U.S. market is the most important market in the world, and will continue to be forever. China, everybody thinks China is going to come on board. I have one word to describe China: communist. They are not going to ever overtake the capitalist country of the United States because of their strict rules and their government interference in everything, even if they look like they might have momentum sometimes. So I kind of think that we get a little bit ahead of our skis with the fact that the world is going to ruin American economy. So I actually don't disagree with the idea of trying to make fairer trade, and through tariffs and through renegotiation of tariffs is the way to do it.
Absolutely. It's I'm trying to find the stat and I can't, but there was something we talked about on another episode of a show we do on this channel with how reliant the rest of the world is on the U.S., not just from a business standpoint, but foreign 401ks or whatever the retirement plan is in other countries. It's like 20 or 30% of what's invested in those are in U.S. securities. There's even more of a percent that's in U.S. treasuries. Like, the world kind of runs through the U.S. economy, just strictly speaking from other people's retirements.
Right.
Like, if you have a pension in Canada, it's not made up of Canadian treasuries. I almost promise you that.
Right.
So
I kind of laugh at the Canadian tough talk right now, and I also kind of laugh at Trump's kind of tough talk to Canada, and I kind of feel like we're going to work it out with our northern neighbors. We're going to be okay.
Yeah,
everything's going to be all right with those guys. I'm gonna give you a little backtrack of kind of where I think things are going. It's a little bit deeper than just the tariffs, right? And I go back to, like, I listen to these political arguments all the time, left and right, and I'm going to kind of give you my thought on it. Okay, the left often blames greed and capitalism, and proposes to raise taxes on the rich. If you listen closely, they argue that capitalism's worst evil is that it causes climate change, which just makes every other problem worse. They want higher tax rates on regular income and investment income, and even talk of a wealth tax and on unrealized capital gains. Then by redistributing that money, the appropriate people and places, the U.S. could fix all the economic problems that confront it, right? On the political right, there's a different narrative, which was recently expressed in an interview, and I heard this interview by Robert Lighthizer and with Tucker Carlson recently. The movement toward freer world trade over the past 40 or 50 years, what he calls hyper-globalization, is at the root of many economic and social problems. And he went into a much deeper deal, which I'm not going to get into this. But his argument, bolstered by the data, industrial production data showed that manufacturing has grown just 4.3% in the past 25 years, not 4.3% annualized, just 4.3% total. Okay, jeez. So the point of globalization is important. Where I think there's where both narratives, in our opinion, are trying to deal with symptoms of the underlying problem, not the problem itself. And here's the deal. Where I'm going to come to what I think the problem is. It's our government spending.
Yeah.
So it has nothing to do with the left and the right can pull back and forth and fight each other. But I'm going to give you some data points here that are crazy. Excluding defense, federal government spending was 7% of GDP in the 50s, 10% of GDP in the 60s, 14% in the 70s. It stabilized there between 1980 and 2000, but then started growing again. So far in the 2020s, non-defense government spending has averaged 23% of GDP, more than triple its size from the 1950s. So you look back 60, 70 years, what is the main problem? It's both parties. It's the drunk sailor spending that we have in Washington, D.C. Yep. And this is it goes back to this. People are really upset at Elon Musk and Doge and all this stuff. You know, maybe the tactics are, maybe they go too strong or whatever.
Sure.
But the reality is either party, both parties, and I thought about this as talking to my mother last night who watches CBS News, and she was telling me that, you know, how bad the Doge is. And I said, you know, watch another news channel, see if you get a different opinion. But if Joe Biden or Barack Obama would have hired Elon Musk to do the exact same job that he's doing right now, it would have been celebrated by the left and cursed by the right. It just so happens that he was hired by Donald Trump, so it's celebrated by the right and cursed by the left. But the point of the matter, government spending is the massive problem.
Yeah.
And that's where we've led to all the things we're going on right now.
Well, if you had a client walk in and they were spending way more than they were making, and you have two levers, you can make more or you can spend less, which is the easier one to pull? 9 times out of 10, it's spending less.
Spending less.
Absolutely. And so if you just simplify the U.S. economy to a budget meeting with your wife on the couch on Saturday, say, hey, maybe we go to Target less. You know, maybe I play a couple less rounds of golf.
Yeah.
You know, it's a lot easier than, hey, I'm going to get a second job.
Well, you think about the American consumer. I saw a stat. We are record highs on credit card debt at this point. Record highs. The problem, though, or the difference between the American consumer and the federal government is when the American consumer hits record highs on credit card debt, there's going to be a stopping point. They're not going to get more credit. The credit card companies are going to consider them too high a risk, and they're going to limit them, and they're going to cut them off, right? And so they're going to be forced to stop spending, right? Where our federal government has continued on, and if you watch any of these stupid things where the government's going to shut down, they kick the can down 6 months. They've been doing that since I've been alive.
Yeah.
And they just keep doing that, and they just keep pushing it to the next generation, the next group of congressmen and women and so on. And it never gets solved. Never. Now they keep blaming each other for, and I kind of went over the things they blame each other on. It has nothing to do with capitalism. In fact, we are moving further and further away from capitalism the more and more our government grows, and that to me is a massive problem. And that's where I'm hoping Doge can exploit that, open everybody's eyes to the fact that this is what we need to do to save our country's economy and save everything. We can think it's tariff talk, we can think it's the world, we can think it's that, but the honest truth, the tariffs might end up bringing manufacturing back to the United States. And why did manufacturing leave the United States? Because our regulations and our taxes are too much for, like you said in the beginning, corporate profits. A CEO's job is to make profits. If they're going to make profits by moving to Ireland or India or China or wherever, and they're going to be able to do something there, Nike shoes, they're in Oregon, they put all their production in China. Why? Because they can hire 100 employees to do the job of 5 employees in America because of our unions and our taxes and our regulations and our all that stuff. And until you bring lessen that stuff and allow our country to have more, get the manufacturing back up, that to me is the ultimate. And between Doge, kind of getting government back down, and between the tariff talk, I think we can actually get there. And I think there's a warm horizon on the future. The markets are up the last couple of days because the tariff talks have seemed to. The anger has seemed to subside, right?
Yeah, well, and everybody's had a chance to
absorb
it, right?
Yeah.
Like the initial reaction is terrifying, especially some of these percentages that are getting thrown out.
Yeah.
I mean, you turn it on one day, it's 50%. You turn it on the next day, it's 15%. It's like, did I mishear him on Tuesday?
Yeah.
And so it's just some uncertainty. And that was reflected. And so, like you said, it's kind of everybody's absorbed it. Now we're just waiting for, because they go into effect April 2nd. Has that been moved
that's
back
the big
again?
day, but Trump is always, he's a wild card, right? He shoots arrows, they shoot arrows back, we shoot arrows, and the whole point of the method to his madness, as I see it, is that again we have been on the wrong end of these things for a long time. Everybody's gotten so used to us being on the wrong end that it's just become normal. So getting it back to normal, average, where everybody's neutral, it's going to take some hard talk and so on, which is happening right now. But I do think ultimately the world needs us more than we need the world, and that's not trying to be rude or inconsiderate to the world. That's just a fact. And so anyway, I think it will ultimately work out. Now, one last thing on that, Isaac. This is what's wonderful. You're new in the business relatively, and compared to me, I'm a dinosaur. You're very, very, very young and new and fresh in this business, which is awesome. Mm-hmm. And you're learning it in the best place you can. We do financial planning as kind of our way we start things, right?
Yeah.
And you know this as well as I know this. A financial plan, when we're done with the plan, we're our client. This stuff that we're going through in the market is really irrelevant to our clients, right?
Doesn't really change.
Some of them
if you do the planning right.
If you do the planning right, you're not participating ever 100% of this junk.
Yeah.
And you've got things that are protecting you when the markets go down. You have different ideas that we work together with the clients. We don't force people into the market. There's very few people that are 100% taking the brunt of these storms when they come through. But the point is, proper planning is the key to success. It is not who's in office or what Trump tariffs are doing or whatever. It's just proper planning. The world goes on and on and on. We will have pullbacks. We will have upswings. We will have bull markets, bear markets, but proper planning will get you through all of it.
Yeah, absolutely. I mean, some of my favorite stats that I like to talk about is with bear markets, and I'm going to butcher the stat, I'm sure of it, but over the last 20 years, the S&P's averaged, somewhere between 9 to 11%, right?
Yeah.
Depending on what article
Historically,
you read.
it's just under 11.
Yeah. And if you take out the 10 best trading days, over 20 years, just 10 days go away, that drops by half.
Isn't that nuts?
And 8 of those 10 days, that may not be true. It's like 7 or 8 of those days happened in the worst bear market.
Exactly.
And so it's not, if you do the planning right on the front end, like you're talking about, those changes shouldn't, you don't need to make changes in these types of markets. And it's probably for your hindrance if you do, because you're going to miss those 7 to 8 days of the biggest gains in market history. Yeah,
there's other stats. There's one about the S&P's average, and then the average American investor that ties themselves to the S&P is far less, about a third of the S&P return, because humans have emotion, and the S&P does not, right? S&P just does what the S&P does. With our emotions, we when we panic and we get out, and then we feel like we're missing something, so we get in. And oftentimes, like you said, it's after the things have already happened, right? Yeah. So we take the beating, and then we get out, and then we miss some of the upswing, but we feel like we're missing out, so we get in, and it's the opposite of what you should do. But it's emotional. It's an emotional ride, and I think this kind of stuff doesn't have to be as emotional and as crazy and make you angry or make you sad or upset or something when you see these ups and downs and all these different talks and so on.
Speaking of things that are upsetting me, how's your bracket?
Oh, my bracket is terrible.
Yeah, it's awful, right?
So the only good thing about the bracket this year is that my 4 teams to make it to the Final Four are still alive.
That's big.
Yeah, it's pretty big, but I don't have much faith that they're going to make it.
No. Mine's totally cooked. I think I'm in last place in the office pool. Which is embarrassing.
That's
to be an ex-college athlete.
There's 21 of us, and you're in 21st place.
21st place.
That's okay.
Yeah.
That's okay.
Who knows?
The funny thing about March Madness, which is so much fun to watch, and I'm invested deeply in the Razorbacks, and of course, growing up here, and the Razorbacks are just overachieving, and it's so fun to watch.
It's fun to watch.
It's so fun to watch, and I enjoy it. But in general, March Madness is fun to watch. There's a lot of games that were really good, but this time of year is just my favorite time of year for all this stuff. ESPN, if you watch ESPN at all, they'll give their brackets and how many are still perfect. Have you seen that?
I haven't this year, but
it's hilarious. They get like millions of brackets, and after the first game, like half of them are not perfect, right? And then like after the first day, 80% of them are broken, and then after the second day, 100% are broken, right? Yeah. Which is what happened this year, right? 100% of them. There's no perfect bracket in ESPN, which is obviously, that makes sense.
I remember when I was in high school. 2012, some billionaire put up $1 billion. If somebody has a perfect bracket, and there still hasn't been one.
There still hasn't been one.
That was 13 years ago.
So I think that might have been Warren Buffett.
I think it was Warren Buffett.
I think it was Warren Buffett that did that. I remember that. The perfect bracket is impossible to achieve.
Yeah.
Okay. I think we're kind of done
everything.
Here.
Yeah.
If you like this episode, which I hope you do, right? This was fast. I feel like we went fast.
Yeah.
But
But
it's
when you're passionate.
when you're passionate. I mean, we're good.
come.
Please like it. If you know, click the button on here on YouTube. We appreciate you hanging out with us every Tuesday for the latest market headlines and of course March Madness headlines. And please like Eli. Tell about
I was going
Eli's.
to say, if you like this video, we have plenty of other videos on the channel with Eli's data briefs, diving into individual topics with research, putting numbers and data to opinions and seeing what comes out true. So
Yeah.
he does a really good job preparing for those.
And I know I'm not supposed to say this, but don't you guys have something that you do?
We have a show called No Dumb Questions, which actually we need more questions for eventually. So if you have a question about finance that you're too scared to ask somebody in person, make a YouTube account, fake name, comment it down below.
So I was a guest on Isaac's show, Isaac, Reagan, and Ashton's show, and I say I love your guys' show.
Thank you.
Because it's a fresh, young look at the markets and just other things. You guys are hilarious, and that show is probably as better or as good as this show.
This one's good.
This show's the best.
This is the best one.
Yeah. All right. So anyway, signing out. I hope everybody has a great week. We'll see you
next Tuesday.
week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.